How does financing work on a commercial grade apartment building? We're gonna break down the exact numbers of my loan today, so stay tuned. Hello there, ladies and gentlemen. I hope you're all having a fantastic day. If you don't know who I am, my name is Aram. I'm a real estate agent and now an investor here in the Chicagoland area. So if you end up enjoying this content, it brings you some type of value, right? And you want to keep seeing more of it, encourage me by hitting that like button. Leave a comment, your thoughts, comments, feedback, compliments, insults, whatever you want to hit me with. Every single one of your comments will get a reply because we're a small channel doing big things over here. Okay, and of course, subscribe if you're not subscribed. Now that's out the way, let's get down to brass tacks. In this video, I want to explain on a general level how do you get financing on commercial properties, and then I'm going to break down the details of my exact case, what I was able to qualify for as a first-time investor. I'll give you my background, my credentials, and then how I was able to get the financing I was able to, what I had to do in the back end. You know, some strings had to be pulled, some conversation had to be had, some people had to be let go, things had to happen, right? I want to explain all that to you. So first, on a general scale, commercial real estate is completely different than anything in any other thing you've experienced in the residential side. If you're buying a condo, a townhouse, a single family, or a 2 to 4 unit multifamily, that's all residential property. So the financing on it is a little bit different. It's actually restricted by, I think it's called Fannie Mae, Freddie Mac, all those little guidelines that the lenders have to follow. It's very restrictive. On the commercial side, it's open-ended. There is no requirements. There's no certain guidelines that they have to follow. It's essentially considered a business loan. Therefore, they have a lot more leeway, right? Your income isn't as important as the asset. But there's also a lot of intricate details that go behind the scenes and I'm gonna break all that down as we go over my numbers, but you have to understand the grand scheme of things, commercial real estate is completely different on, number one, how they value properties and how they lend on it, versus on the residential side, it's very strict. It's actually harder to get a loan on a condo. For me to get a loan on like a single family or a 2 to 4 unit would be much harder than me getting a loan on a 5 unit plus, which is considered commercial property. And it's valued different. I've explained this in other videos because technically it's looked at as a business. You're never gonna live there. It's not residential property, it's commercial property. So it's looked at as a business. So when you come in, they say, okay, how is your business performing? The business you're about to purchase, is it distressed? Or is it stabilized and making a lot of cash flow? So your financing is strongly dependent on the property or the deal that you are able to find. So that's very important to keep in mind as well. So if you go out there and find a property that needs all this work, it's gonna be very difficult for you to get lending on it. So as a new investor, you have to be like, okay, I have to find a deal that is a very good purchase price in a good area that a lender will be comfortable lending on, whereas I could go in and all I have to do is just literally raise rents because that has been mismanaged or something along those lines. Or you guys say, you know what, it's my first deal, I gotta bite the bullet and buy something that's a stable investment. Yeah, I'm not gonna make a killing, but it's gonna open doors for future deals, right? So you have to have that perspective, which is what I had. I just got lucky enough where I found a deal that did both at the same time, right? So with that being said, let's get down to all the exact figures for my current deal, okay? And you'll find that the terms are a lot more favorable than if you were to go get a single family home, which in theory should be an easier loan to get. So let's start with my loan amount. My loan amount was $547,500. Purchase price was $730,000. So that loan amount is based on a 75 to 25. So basically 25% down, 75% was gonna be financed. Next up is the loan term. So one thing that is significantly different between commercial property and residential properties, on residential you get a 30-year fixed mortgage. That means the market go up, down, stay the same. Your rate's never gonna change. You're never gonna have to refinance. You never have to talk to a lender again if you don't want to for the next 30 years. That is not the case for commercial real estate because things are always in flux. Things are always moving. And you have to understand this. So therefore, you don't put yourself in a position where, hey, it's time to refinance, requalify for this loan, and either your property doesn't or you have issues doing it. So that's how people lose in commercial real estate. So you have to understand that's very important. So the loan term is 5 years, but financed over 30. Amortized is the word. So the loan term is 5 years, amortized over 30 years. What that means is in 5 years, my loan is due. Basically, in 5 years, I either have to refinance and reinitiate another 5-year loan, or I have to pay off the full balance of my building, or I have to sell it. Because in 5 years, my loan is going to come due. Now, the reason they do this is basically to force you to constantly come in, reevaluate the situation, refinance, or keep it moving. That's basically the goal of it. Because with commercial, just like a business, you have to be hands-on. And it's amortized over 30 years to keep your payments low. So even though my loan is going to be due in 5 years, my payments is as if I have a 30-year mortgage. Now that amortization over 30 years is dependent on what lender you work with. When I was trying to find a lender, I called maybe 5 to 8 people I had conversations with. I knew which ones weren't taking me serious, and I knew which ones were at least gonna hear me out and give me a chance, right? There was a couple of them. One wanted me at a higher interest rate with a 25-year amortization, which means my payment would have been higher because of the interest rate, and it would have been higher because it wasn't being financed for as long. And another lender said, oh, we don't care about all that. The building makes sense to us. It's the type of properties we lend on. This is what we know the best. We're gonna give you a much lower interest rate, and we're gonna amortize it over 30 years. It was a no-brainer for me. I said, perfect. That opens up so much more cash flow for me. And as an investor, if you know what you're gonna do in the next 5 years, and I know what I'm planning to do in the next 5 years, within 1 to 3 years, I'm gonna exit the building, right? So what I care about is maximum cash flow in the next, for the first 5 years, and then we're out. Because I'm gonna stabilize the building, I'm gonna raise the value, I'm gonna bounce. That's the goal. Now, one thing that is pretty cool about the loan I was able to get, while I did put 25% down, the lender did let me know, it's actually in my contract, it says loan to value. Initial loan to value will not be greater than 75%. The loan to value ratio can be as high as 80% if the debt service coverage requirement of not less than 1.1 is met as calculated by the year. What that means is, as soon as I stabilize the building, even though I put 25% down, the bank's gonna send me that 5% back, that extra 5% between 20 and 25, which is $36,000. I'm gonna get that wired right back into my account. And the payments is actually based on a 20% down payment, even though I put 25. And the way they structured this to make a lot of sense, and this is why I love commercial, because they do things that make complete sense. The first 6 months of my loan is interest only. So that gives me ample amount of time with a much lower payment, increasing my cash flow, gives me a lot of time to be flexible and increase the rent, stabilize the building, and get that debt coverage ratio up. And then by the time the 6 month is due, I'm already going to be at that 1.1% debt to income ratio, which means I'm gonna get my 36% back. Which means I'm gonna get my $36,000 back, and we at that 80-20 loan to value, which is perfect. So that's how actually the loan was set up. That's how my payments were set up. So basically, in essence, I have that amount of equity. Next up is my interest rate, which shockingly enough is much lower than if anything you would have bought on the residential side. Now I work with a lot of investors on the residential side as a realtor, and the interest rates I'm seeing is anywhere from 6.2 to 7.5 depending on the loan you're getting, your credit, your experience, the type of property, etc. There's a lot that goes into it, right? So it's around 6.2 to 7.5%, which is insane. On the other front, because the commercial side is a 5-year loan, you are able to get a much lower interest rate, which for me was 5.35%, which was incredible. I'm like, why would I buy a 4-unit, which comes with all the same headaches as a 6-unit, but get a much higher interest rate and a lot less cash flow? It doesn't make sense. So once you understand financing on a commercial level, you'll never go back. Next up, I want to explain the debt service coverage ratio. On the residential side, they do have this thing called the DSCR loan, which is simply influenced by a commercial loan. And what it means is the 1.1 over 1. And the calculation of when I get my $36,000 back is based on this. When my net operating income divided by my debt service, which is on an annual basis, how much do I need to pay the bank? When that percentage is over 1.1, I get my money back. So here's how the numbers shake up for me. My building, once fully stabilized and leased out at the right amount, should be bringing in $93,000 a year. My net operating expenses are about $26,000. That's an overestimation, so we could be safe. That means my net operating income is $67,000. Divide that by $39,800, which is my annual debt service. That's how much my payments come up to. I'm at 1.68% debt service coverage ratio. That means I'm sitting pretty. That is why the bank was able to give me such a good loan, such good terms, because they recognize the deal made sense, right? So if you're trying to get financing on commercial property, just by finding a great deal, you will then vice versa be able to find great financing on that deal. And finally, one thing to note is the prepayment penalty, which is initiated when you refinance or when you sell. You have to, whatever bank you're working with, you gotta make sure that you understand that aspect of it. Because if your exit strategy is, hey, I'm gonna be in and out within 1 to 3 years, that 2%, 1%, 3%, 4% prepayment penalty could be pretty substantial, and why pay it if you don't have to? Let's say, for example, you were gonna make a 15% profit, but you're paying 4% as a prepayment penalty. Hey, homie, that's a lot of money. You sell for $1 million, that's $4,000. Keep that money in your bank. So you wanna avoid prepayment penalties if you can. Now, if you're a brand new investor, you may not get as lucky as I did, but if you can avoid it, it's great. So mine is structured the following way: 2, 1, 1, 0, 0. And what that means is year 1, if I sell, it's a 2% prepayment penalty. Year 2 is 1, year 3 is 1, and then it's 0, 0. This is to encourage you to hold the property longer because the bank makes money as you pay interest. I think that part is pretty obvious. However, the bank I work with will waive the penalty if I sell it to a third party, which means I sell it to anyone but myself. And they will waive it if I was to go refinance with them. And that's because I brought it up, I requested, that's what I wanted, and they were able to work that into the deal because, again, it's a fantastic deal. And then finally, one of the requirements that the bank asked me is that I need to deposit $25,000 into there, but start a new checking account, deposit 25 grand, and have the cash sit there, and then they're gonna pull the payments, the mortgage payments, the interest, and the taxes from that account. This is a great way for you to build trust with the lenders. And this is why it's important when you are ready to get into commercial real estate, you have excess cash to actually start establishing that relationship to live up to your word. Now, I didn't have to, even though it was a requirement, I could just not deposit the money. What were they gonna do? Take the loan back? Of course not. But if I want another loan, like I'm doing right now with the same bank, same property, well, guess what? It's a lot easier. We're gonna get approval within a week or two, which last time took about 4 weeks to get. And that pretty much covers the financing portion of commercial property, at least from my experience, from what I've seen. But I wanna leave you guys with some bonus tips of how I was able to find this lender. Number one, I Googled commercial lenders. I must have reached out to 12 people, had conversations with 8 of them. 4 of them were I could tell right away they weren't trying to listen to me. Their rates made no sense, the down payment made no sense. They were only gonna work with me if they could screw me real hard. And I'm not about that business. But then I found a couple lenders that gave me a shot, and I settled on one of them, and I made their life as easy as possible. And one of the things these lenders really care about, number one, is the deal make sense. Number 2, do you have the cash to support the deal? Those are the 2 primaries. Number 3, which is very important, but the first 2 are little priorities. This is all in order. Do you need the cash flow from the property to support your lifestyle? Now that's a big red flag. If you're gonna buy a property, never tell the bank, hey, I'm gonna use the cash flow to pay my bills, yada, 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 right? It's always extra income. It's just on the side, I don't need the cash flow. Now in my position as being a real estate agent, I just provided my personal tax returns. I was like, look, you could tell, I don't need this cash flow. I don't need this $1,000, $2,000 a month to survive. It will not change my life, which again, is what allowed me to get really good, favorable terms on the financing front. Plus, the one thing I love about commercial real estate is it allows you to sell yourself. And I explained to them, while this is my first ever rental property, I've been working with investors for the last 2 years, and I can give you a Rolodex of all the deals that I've been involved with where I've identified it as a good deal, I helped them purchase it, I helped them renovate it, I helped them either rent it out or sell it for a profit. They're like, okay, great. Can you please write all that down? I wrote all that down, sent it to them. The loan was approved. It was super, super easy for me. These guys, they still have not asked for me to provide bank statements to verify the money was actually mine. I could have robbed the bank, put it in my account, sent it to them. They would not care because that's commercial real estate. I even asked him, I'm like, hey man, I'm not trying to get away with anything here. Do you need my bank statements? Because I got them ready. And he's like, no, we don't need your bank statements. So we figured if you don't have the money, you're not gonna buy. Fair enough. And that is why we love commercial real estate. And I hope this video gave you a little bit of insight on how the financing works, because I think it's a big black hole in people's brains. And once you realize how easy it is and how much you can actually maneuver everything around it, you'll probably get into commercial real estate a lot sooner than you think. Thank you for watching. Please like, comment, subscribe. And of course, if you made it to the end, let me level with you for a second. If you need one-on-one conversations with me on a weekly basis, there's a Patreon link below. It's $10 a month. You can't lose. You can't lose. 4 times a month, which every Thursday at 10 a.m. Central, I get on a Zoom call. Anyone's welcome to join, and you can ask me anything you want. personal life, business, investing, whatever. Whoever position you're in, come, say hello, have a chat, have a cup of coffee, relax, every Thursday, 10 a.m. If you're interested, links in the bio. Thank you very much. Have a great day.